this is Greg Kelly. Donate now to Toys for Tots, which works year-round. Go to toysfortots.org. Toys for Tots supports children in need throughout the year with programs like the Toys for Tots Literacy Program. Established in 2008, it has provided over 63 million books to disadvantaged children. The Toys for Tots Literacy Program is committed to providing disadvantaged children with direct access to books and educational resources that enhance their ability to read and communicate effectively. Go to toysfortots.org.
The Larry Kudlow Show. Entertaining and informative on the Red Apple Podcast Network.
Welcome back, folks. Larry Kudlow here. We're dissecting the Iranian war and related subjects. But that includes the economy and oil prices and the Strait of Hormuz. You know, all I'll say is I'm going to let our experts tell us what they're thinking. But for all the negative headlines, and the market got, pummeled last week, but the first 7 days, the Dow Jones is off 3%. That's all it is. And the S&P 500 is off 2%. And the NASDAQ is off 1.2%. So whatever your vision of the future is, we have not had a catastrophic, 8, 10, 12% drop, at least not yet. Anyway, we have Stephanie Link, Hightower Advisors, and Chief Investment Strategist and Head of Investment Solutions. We have Nancy Tengler, CEO and Chief Investment Officer of Laffer Tengler Investments. Nancy's latest book is The Women's Guide to Successful Investing. Ladies, thank you for coming on. Nancy, I'll start with you and just say, what are you thinking? Tell us what you're thinking.
Well, it's good to be on with you and Stephanie, Larry. Thank you. I'm pretty optimistic. I think this is an opportunity. Earnings have been great. The 10-year is still below the levels of a month ago, so it's staying range-bound and not really signaling panic. And we've had great opportunities to buy companies that have exhibited or performed triple plays, which is a beat on earnings, beat on revenues, and raise of guidance. And they sold off on the news. So I think this is an opportunity to add to many of those names, which is what we've been doing in some of the software plays, for example, ServiceNow, Microsoft, Palantir over recent weeks, and then to really enjoy the performance of some of our largest holdings like Broadcom and Lam Research. So I think investors need to step back and say, we keep hearing this this breathless, the Iranians said they were going to, double down and dig in and fight back. And it's like, yeah, and that's what we call rhetoric. Rhetoric.
Yes.
They don't have the tools. And so I think we're getting close to more certainty. And I think the oil market will capitulate to some extent. And that'll be good news all the way around.
We're going to fix the oil market. The problem with the oil market was not the Iranians. It was Lloyd's of London.
Right.
And now that's being fixed. We have this, whatever it's called. It used to be, we're guaranteeing the Insurance Development Finance Corporation. That's the name of it. Actually, we put it together in the first term. So they're going to, reinsure. And then hopefully we'll open, I want to see a bunch of tankers go through the Strait of Hormuz. If they require naval protection, fine. Just get that done to show people that whatever they're worried about on the oil front, it's not a problem. There's only a few Iranian motorboats left. They're like little skiffs. The rest of the Navy is at the bottom of the Persian Gulf, for God's sakes. Anyway,
exactly.
Stephanie Link, what you thinking?
Well, number one, in terms of the war, I've never made money trading around any kind of geopolitical issue, other than to say what Nancy just said, in that there's opportunity to be buying great companies on sale. I've never made money selling into this fear, and so there is opportunity. And you kind of stole a little bit of my thunder because you talked about the markets year to date. We had Venezuela, we had SCOTUS, we have AI and software Armageddon, we have private credit concerns, and now we have this. And the S&P equal weight is actually up 3.5%. So we have seen the broadening out. Why have we seen the broadening out? Because, the non-farm payroll report was ugly, but there was a lot of one-off there, including weather, strike, birth death adjustments. But beyond that, you had some pretty decent economic data this week. Number one, initial claims continue to be low. Productivity keeps on. It's keeping on going. It actually got revised for the third quarter to 5.2%, 2.8% for the fourth quarter. ISM manufacturing is now in expansion mode. And even retail sales. I'll take 3% growth year over year in retail sales, given all the weather stuff that we've had going on. So my point being is, war is ugly. The non-farm payroll report is kind of ugly, but there's some other things there, and we yet to see one big, beautiful bill. So I think the economy is still going to hang in, and that's why earnings are doing better than expected, and that's why you want to be buying. Unit labor costs 1.3%. That's the ultimate inflation for labor and perhaps for the economy. You are so right. Retail sales, 12-month change, 3.2. The core retail sales, you take out the autos and gas and buildings, 4.9. Again, you're right. Purchasing managers looking very strong. Productivity, 2.8, last 4 quarters. I agree. Initial unemployment claims stuck at 213,000. It's a big nothing burger. I agree with all of you. I'm glad to hear you're not. I think the oil prices, all right. You might have an inflation thing, not this report, but the next report. But we know it's temporary, right? Don't we know that?
Mm-hmm. Yeah, and we also know that tariffs are going to be a net benefit to individuals or to companies, declining by about $79 billion on the new tariff rate, thanks to SCOTUS. I think the president should have gotten up at the State of the Union and said thank you. I think that's going to offset. But I just want to add one thing.
He did shake their hands. He shook their hands. He was very gracious, right? They just took his major policy out, but he was there and shook their hand. Did you notice that? This is the new gracious Trump. It's very important. I'm proud of him. I'm sorry. Go ahead.
No, I was just going to say, in the 90s, we had an average rate of unemployment of 5.8 to 5.9%. Oh. And productivity was about just under 2%. And then in the second half of the decade, it ran up to 2.5% annually. So I agree with Stephanie 100%. We believe that productivity is going to carry the day. We've been talking about it for 3 years. It's not just AI. There's all sorts of efficiencies that are being realized. But you can have, and Chairman Greenspan raised the Fed funds rate after cutting. So we can, all this hand-wringing over whether we're going to get 1 cut or 3 cuts, at this point, that is not what is going to drive stock prices. It's going to be fundamentals. And there are a lot, I don't know how you felt, Stephanie, but I thought this was an incredible earnings season, and guidance was good, which is what really matters.
And it wasn't just, it was revenues, but it was margins. Margins. Yeah. Everyone's talking about how margins are going to roll over. I feel like for the last 35 years, that's what I've heard. Margins are always going to roll over. And actually, we're seeing margin expansion. So you're getting such operating leverage, and that's why, 14% earnings growth is phenomenal after what we have seen over the last couple of years. It's incredible.
Yeah. You two, down through the years, you two are among the smartest investors I know. And you're laying it out. You're laying it out. Look, profits of the mother's milk of stocks. This other stuff's going to pass. I don't want to downgrade it because it has massive historical and world affairs, but the American economy is in good shape. We're producing a lot of oil. By the way, we're an oil exporter. All right, I keep saying that to people. Even whatever oil shock is happening, it's not like the 70s. Yes, because we have we're producing a lot of, everyone associated with producing oil and gas actually benefits from higher prices, okay? Mm-hmm. So it's a whole different idea. But the profit story looks good and the productivity story looks good. I love your, what did you say, the equal weighting is 3.5%?
Yep, S&P equal weight up 3.5.
My God. That's right? You know what? That's fabulous. I forgot to look at, I'm going to have to put that on my stocks.
Just put a Post-it note on your computer screen.
I had
covered with it.
I had Yardeni on the TV show this week. It was a great pleasure. He's a smart guy. We were talking. we're going to reinsure the oil tankers, get them through the Strait of Hormuz, just put a bunch of them through to show that it's okay. And these oil prices they'll stop rising, and eventually, they'll settle down to where they ought to be, which is probably someplace around, $60 where they were. Anyway,
I think it's kind of interesting. I think it's kind of interesting. We go after Venezuela and we go after Iran. Well, that's going after China.
Of course,
right?
Yeah.
And that's a good thing.
Oh, and geopolitically, this is just a wonderful thing. A wonderful thing. We're talking stocks with truly two of the best investors I've known down through the years, Stephanie Link, now Hightower Advisors and Investment Solutions, and Nancy Tengler of Laffer Tengler Investments. In her book, The Women's Guide to Successful Investing, we bring in my dear friend, the great Steve Forbes, chairman and editor-in-chief of Forbes Media. Steve's latest book is Inflation, What It Is, Why It's Bad, and How to Fix It. Steve, thank you for doing this. You're going to stay over from any politics, too, if you can.
Yes.
Our two ladies are relatively optimistic about the longer-term view in the market. I just wonder what you're thinking.
Well, I think we're trying to trade the market in these kinds of orders would be ridiculous. And you just have to see things through, even though there's going to be probably a lot more volatility. As you know, Larry, wars always throw up unexpected things, both good and bad. So just stay through with it. And one of the things we should be looking at, too, in terms of that seemingly bad jobs report, is we've got a seasonal adjustment problem. As you know, in December, we got hundreds of thousands, perhaps a couple of million people coming temporarily into the job force for the holidays. In January, most of them leave the labor force. So they try to seasonally adjust for that, these massive numbers. And that's why December, January numbers I take with a huge grain of salt the side of Mount Everest. And when you have the uncertainty about tariffs, when you have the terrible weather, you have a nurses' strike in New York, which affected healthcare workers, I just shunt that all aside. I want to wait a couple of months till we finally get a real take on things and to see how the Kevin Warsh hearings go in Congress, because the Federal Reserve, what I worry about with the Fed is that if we have a sustained spike in oil prices with their Phillips curve prosperity cause inflation mentality, they may do something dumb instead of reducing short-term rates, which they should have done a long time ago.
Well, on that point, I had Mickey Bowman on the show last night, vice chair of the Fed for Supervision, an old friend of mine, very smart woman. She wants to cut rates, Steve. In fact, she wants to do several things. She agrees with Kevin Warsh about shrinking the balance sheet and reducing the Fed's assets. She wants to have lower interest rates. She believes the banks are over-capitalized, okay?
Yes.
And she wants to see them make more C&I loans to, medium and small businesses. I mean, she has a very good pro-growth agenda. We talked about how stupid the Fed is, 1.7% growth. Forever and ever, and she agreed. She basically said, "I'm a supply sider." I mean, it was really quite an informative interview. I just turned the switch on, and she went, "Go," and she did. It was terrific.
Well, that's good long run when we get over these current crises, because the Federal Reserve needs a fundamental overhaul and have at least several governors understand the profound flaws of the Fed in terms of their modeling. You're going to get institutional resistance, but if you have the Treasury Department, which you do, and the White House, which you do, and you have several people on the board itself who understand how malfunctioning the Fed has been in terms of their modeling for a number of years, that can begin to fundamentally change the way the Federal Reserve sees the world, because they've been a destructive force. That size of the balance sheet, by the way, they'll never research it honestly, has had a bad impact on lending to small businesses and the like, to store to the capital markets. And in terms of her point about the banks lending again, imagine banks hiring more lending officers instead of compliance officers. We need that.
Stephanie Link, what do you think of all that? That was quite a mouthful. He's a smart guy, Steph.
he certainly is, and I'm glad that he's very constructive on long term on the equity market. And honestly, I mean, the Fed is going to be an interesting watch, right? Because they're kind of a little bit in a bind in terms of what do they do. He's got to corral all the people, right? And I just hope that he can And I think Steve's right in terms of I think they should have been lowering rates for a long time. And now with the labor market kind of a little soft, they can, I think, and I think that they should.
You know, Nancy, I will say this. This goes to Steve's point about flawed seasonal adjustment. I don't believe any of these numbers. Because of the shutdown, I mean, and I'm a numbers guy, okay, or I used to be. I just don't believe any of it, honestly. I see them and I just say, yeah, what else is new?
Well, and they're so subject to massive revision as we've seen over the last couple of years, and so it always surprises me when the market trades off the today number because we know it's going to be revised. But if you look deeper in the ISM manufacturing and ISM services, you see that people are hiring, and the employment numbers went up. So that's to me is much more instructive real-time data, real data, instead of all the estimations and seasonal adjustments. And Kevin Hassett said on All Airs on Friday that, it's the birth-death model. And so it's been revised again, but we treat this like it's the gospel when the numbers come out. And so I just think, again, it just creates opportunities for long-term investors because the employment picture is pretty solid. I mean, we had 5.8% unemployment during the 90s. And stock prices, the economy grew, stock prices rose, generationally high levels. So I just think you have to step away from the numbers, look at the trend lines, but look at the real data. And to me, that is the ISM numbers.
Look at the 4-week moving average of weekly jobless claims.
Right.
That is what you pay attention to because it's more real time. Yep. And you're at 215,000 over the last 4 weeks. These are historically low numbers. Recession is 350 to 375,000. Yep. We are way away from that. So I think a lot of it, I think Nancy's right, and I think Steve's right. This is a lot of noise, and you're getting a lot of opportunities.
You know,
small business is hiring. Small businesses are hiring.
E.J. Antoni, I don't know if you know him, but he's a smart chap. He looks at this private sector inflation tracking. A million prices, much bigger than the government, and the inflation rate is less than 1%. Anyway, you're all fabulous. Stephanie Link, thank you. Nancy Tengler, thank you. Steve Forbes, thanks. You're going to stay over for Money in Politics with Liz Peek and Steve Moore. I'm Stu Kudlow, and this is a great country, folks. We'll be right back.
The Larry Kudlow Show on the Red Apple Podcast Network.
At Manhattan University, a graduate degree is not out of reach. You'll gain real-world skills, credentials employers value, and connections to New York City's top companies. Choose from their new Master of Science degrees in healthcare informatics, digital marketing and analytics, business analytics, or financial analytics, all built around hands-on learning and industry partnerships. Graduate ready to lead, not just work. Take the next step at manhattan.edu/graduate. Manhattan University. Lead the future.